Okay, so what's up, my folks? What's up, my team? So it's been a long time since you've heard my voice, like in a live session. I know that, like almost 10 days or so, less. I got married too. So let's go. So on this session, we're going to discuss the statistics that Adria, like a good student of mine, that he's so into quantitative trading, not manual trading, like so robotic thing, like AI, so on, which is like amazing. He backtested 2000 events, good for the last 3 years, 2018, 19, and 2020, good. So I'm gonna first show you the results for what he did, good, and which was everything was just based on a simple method, a simple technique, which is the bus theory, which is like orders flow with no risk management rules. It's either like the trade hits a stop loss or a TP, good. So we're going to go through this first, then we're going to go through the bus theory, good. So this video or this live session is going to be mainly about the bus theory, which is order flow, the way orders flow. We're going to be rational with this and try to connect it to real life shit, good. So first of all, let's go to this, share. So these are the full 2000 events, good. These are the full 2000 events. Okay, working on it. These are the full 2000 events, good. Spread. Nah, don't give me this. Whatever. So these are the full 2000 events, good. Spread, he backtested on EURUSD, good, because he trades mainly London Open, good. And over the 3 years, the return were like 40%, good. So this for everything. This was market open, New York close, overlap, London open, London close, everything good, with no risk management rules, no rationality, just some basic concept, good, with a spread of 2.5 pips, which is not there. It doesn't exist. Having 2.5 points or 2.5 pips on EURUSD doesn't exist at all, good. So this is the statistics of what? This is the statistics of the overlap. Good. These were the statistics of the overlap. Good. Which we can see 50% to 60%. So these events were around 350 events. Good. Because the whole 2000 events were based on what? Were based on the whole day, from market open to market close. Perfect. So yeah, these were like 301 events just for the overlap over the set of 3 years with no risk management rules. It's either a stop loss or a break or a TP. So that's why when we talked about the risk management rules, why? Because we looked over the stop losses at like how many stop losses we got without risk management rules, and they were like 75% over like 4 years. Sorry, this data is like for 4 years. Good. So these were like 75%. So assume these 75%, we got like risk management rules for them. What's gonna happen? So, and these are the data for what? These are the data basically for stop loss bigger or equal 10 pips, because he backtested that assuming that the spread is 2.5 pips, which is wrong. I cannot change it in here. I gotta like download this Excel thing to be able to change it. Viewing, I cannot edit it in here. So, however, good. So these were the stop losses were like bigger or equal to 10 pips. And the returns were like around 100, let's say 100%. At some point it reached like around 180%. Good. And stop losses are still 74%. Why? Because you gotta put into consideration the fact that how many trades, we're working on this now, how many trades did like go up 30 or 40 pips in our favor, then pushed all the way down to stop loss? You got put that into consideration, which is a lot. Good. We just dropped like a basic statistics yesterday on this, and it was already out of these 74%. 90% of the time, 90% of the time, the price will move in our favor 30, 40 pips, then come back all the way down and hit that stop loss. So we're working on the risk management rules. Good. Now, nope. Okay, stop loss. These are the data. Okay, so this is what? This is from market open to where? Agent basic, the agent session. Good. So returns were good too. Returns were like pretty smooth. Can see the curve. First year, second year, third year, fourth year. Can see the curve. Good. But still the same problem. We're working on the risk management rules and the spread. Don't forget the spread, because when we change the spread, backtest. So this is when we change the spread and we put it a commission, which is like the commission is like 0.5. One lot is $5. Good. And the spread is gonna be like 0.0, but we dropped it like 0.1. Good, to make it more realistic. And these were the returns over a set of 2000 events. Good. Over a set of 2000 events. And this was mainly for what? This was mainly for London. This is mainly for London. And the same problem, we still got what? The risk management rules, the stop losses. Good. The stop losses. And then, yeah, this is London for like stop losses bigger or equal 10. Returns were like 120% over like a set of 4 years. And this is New York. We're coming to New York now. We're coming to New York. So in New York was the most sustainable returns. Like it was really the most sustainable returns in New York. And then you can see basically this is in New York, right? This was in New York with a spread of 0.1 and commission 0.5. The returns were like 140%. And then we come here and the spread is 2.5, which is not related at all. You can see what's up. Was minus 20%. Without risk management rules, So it wasn't in the favor at all. Now this was what? This was when the spread was bigger or equal 10 pips. So why did we do these statistics? Because when he dropped the 2.5 like point spread, 2.5 pips, it makes difference, when you have like a 10 pips stop loss, it makes super difference, And look at the difference just through your eyes. It was 80% over a set of 4 years worth of data. Good? And then this was what? This was the market close. Market close, basically trash. Why? No liquidity and really wide spread. Good? And the spread 2.5. Again, it's not profitable at all. So out of all of this, what we get like London, overlap, New York are really amazing, right? Are really amazing to trade during these times. So these were the statistics. Yeah, these were basically the statistics. These were basically the statistics. These were basically the statistics. So now let's go to something else, which is the theory. Wait, before all of this, you all can unmute yourself and ask questions, or share your thoughts.
So, did you backtest every trade manually?
Every trade was, no, not manually, it was a robot, basically. The goal is to build a
Okay.
robot, an AI robot, or expert advisor to trade for us, to keep on trading for us all the time. Good.
Clear.
I wasn't manual. This is quantitative trading, which is not manual at all. That's it. So these are the whole 2000 trades, 2000 events for like every day, market open to market close, which the returns were like up to 80%, then consolidated around 40%. Good. I just want to show you something that you see the spread makes a difference, makes super fucking difference when you're like scalping or having good entries too. Makes difference. Good. And risk management rules, scenarios, and the way you cash out profit, you know, makes difference. These are basically the data from the robot. These basically the data we took from the robot. Times, everything, days can go down. You can see 2018 was from the beginning of 2018 till now, basically, till yesterday. This really took some serious work because the language was in C++. Yeah. So basically, what I showed you this, the reason I showed you this is why? Is just to show you the most like basic technique that you guys know works, you know. Then how you actually like take your performance further depends on what? Depends on your risk management and the way you manage your trades. Good. So the shit you're doing actually works and generate some nice returns that a hedge fund won't give you. Good. And a hedge fund won't actually give you. You saw like buy time, market open, market close, they are not profitable at all. Good. Then you saw what? You saw London, New York are the best, but the overlap is the best to trade during. Good. And all of these returns, all of these stop losses we got, basically because we had zero risk management rules. It's either like enter at this price or what? Have a stop loss TP. So either hitting a TP or a stop loss. And you all know swing trading doesn't work, over the long run. So that was it for the statistics basically. We're gonna keep you updated with everything we do. Now we implemented the new rules, which is like whenever the price is like 10 pips and 10 pips, it's gonna like take 50% profit and stop loss at break even. And we're gonna see what break even basically at the coast. So 1 pip and profit. So we're gonna see what's up in January on the 9th. We're gonna have the new data basically. We're gonna let you know what's up. But meanwhile, just the simplest concept you guys learned works. Good. So that means what? That means don't trip, be disciplined, and just follow what you're doing, just consistency, just keep on doing what you're doing. What's this? Anas, what did you send me? Bro Quant. Okay, I'ma check it. Thanks, I'ma check it. Nice, nice. Yeah, but I'm doing my trading robot on the app, right? The whole thing is like of us building our own AI. It's not a trading robot, it's an AI agent. It's not even a trading robot, it's an AI agent. Good. So at this point, we're just feeding the agent with data. It's not a robot because at some point we're gonna connect it to the internet and let it feed itself by data. So it develops what it learned from me, and then it start teaching me to. So it's gonna take some time. Like it's gonna take some time. Exactly. Exactly. So now what we should do is, yeah. So let's jump to next, which is our whiteboard, and talk a little bit about the bus theory. So, guys, let's say, let's say, let's start like this. Let's say you're in London, good? You're in London, and I'm in Berlin. You want to come to visit me, basically. You want to come all the way down, yes, vice versa, whatever, to visit me in Berlin. So what's gonna happen is, okay, you say like, okay, I don't wanna go like fly, I don't wanna take the train. I feel like having a road trip, which is possible if you live in Europe. Right? So we like, I wanna have a road trip. So you pull up from London, You keep on what? Moving, you know. You reach the Netherlands, then you reach the Netherlands and you want to come to Berlin. So your whole trip is basically one trip, right? This whole trip is basically one trip. But however, this one trip you're taking, this one trip you're taking from London basically to Berlin, it's not just gonna be one line like this. Just you're just gonna drive directly there, right? You're gonna be driving, stop in the middle, right? To do what? You want gasoline, you want some food, you want some rest, right? But sometimes you're just gonna have like what? The hotel or the gas station or the motel, wherever, on the same side, right? So you're basically not doing any movement, you're just consolidating to keep on moving to your direction, right? Or like to your end station, which is Berlin, right? However, sometimes when you're moving, you don't have no gas station on the same side. So you gotta take the U-turn back, right? And find your thing there, like refill your gas, your oil, your water, eat something, rest, then keep moving, right? Then the same, you move further, you need to refill your stuff, take a rest, blah, 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 keep moving, keep going to your direction. The same thing in here, right? Till you get to your destination, basically. Does this make sense? So, this is the first thing. So, what does this has to do with trading? What does this has to do with trading? What does this has to do with trading, my friends? Questions. I'm asking a question. I'm expecting some answers. What does this have to do with trading? Market behavior, exactly. Think. You gotta read my book too. So, market behavior. Everything in life moves in waves. Good. Everything. Like everything. We're energy. We matters. Everything in life moves in waves, especially this market too. Your heart impulses, like pulses, your brain waves, your whatever, the grass, the trees, your sound, you know. Exactly. It shows that the market even has to slow to what? In order to continue, basically. Good. That's a basic shit. Like that's some basic shit, you know. That's some basic shit. That's just some fucking basic shit. Yeah. Which people actually struggle to understand. Or like, yeah, most people do. They don't even know that that's how it moves. Too. Good. So your gas station, your gas station, the gas station is what? The gas station represents your sensitivity areas, which is like supply or demand. It doesn't matter. That's your gas station. Why? Because you basically enter the gas station to get to refill yourself, your car, so on, right? Then you exit the station, right? That's what you do. Let's continue. So let's say now the bus theory. Bus theory. Yeah. So here is A, here is A, and here is B, and here is C. In the middle, you got your road. You got your road. Good. So A represents a bus station. B represents a bus station. C represents a bus station. And this is me. This is me, basically. Yeah, whatever. This me. And this is our bus coming from here. Good. This is our bus coming from here. So this bus is gonna take us for where? We are here. We're going to A to take the bus. We wanna go to where? To C, right? We wanna go to C. So this bus is coming, it's just driving. Good. It's just driving, coming from this street, just driving. And I'm going to A to get the bus. So how do you get in the bus? Are you jumping in the middle of the street? Answers. Are you jumping in the middle of the streets? Middle of the street, sorry. Or are you waiting in the bus station till the bus stops, park, and you get in to go to your next destination? Yeah, I know, like, you be like, what the fuck is this dumbass talking about? But how the fuck you fucking trade? You enter the market when the market is just like you're selling when the market is just going up, and then you're buying when the market is just going down. So don't think that, yeah, I'm done, or like this guy is just tripping at the moment. No, I'm not tripping. Good. So you wait in the bus station till the bus stops, completely stops. Then it opens the door for you to get in. Then it even asks you to show your card or your ticket. Right? Then it moves. It stops at B for people to come in and come out. Yeah, right? And then it moves further to C, right? However, each time it stops, or each time like a person gotta get in or go out of that bus, gotta wait in the bus station, and anyways, gotta wait till the bus completely stops and opens the door, right? So what does that mean? What does that mean? That means that, let's say the market is going up, right? Let's say the market is going up. So you want to take the market, you want to just move the market, you just want to go up, right? But you see that the market already created a higher high, a new high. So you know, like for a fact that it's going to either drop down or consolidate, right? So how we know that? When you have like a really nice demand area, right? Or price already consolidating here, and it created a mid-range and is about to shoot up, right? So what I'm trying to say is like, you never sell an uptrend in the middle of nowhere, and you never buy, what? You never buy an uptrend when it's correcting. You always move the bus. You wait the bus to stop, then to open the door, so you get in, then you move further. That's why I keep stressing entries. Like, yeah, you be right. Direction wise, my G can get the direction, bro. It's easy, but trading is different than analysis, bro. So it's about being rational and making sense out of shit. So you always wait the bus to stop, completely stop. for you to get in it. I should open the door for you to get in. It doesn't make sense if it stops and then they open the door for you to enter. That means what? That means what? That means if price going up and you decided to get in, you wait for your what? You wait till the bus opens the door for you. So you get in it, right? You buy at demand, you drop a buy stop above what? Above supply. So you take advantage of the momentum, right? And then you're buying at this nice pullback once it creates support too. And you keep on moving further. Even if it pushed up to this high and then it start retracing, you're already good. You already have a nice entry. You already can cash out. You know, for everything, my friend. Not scalps, not swings. It's everything. Everything. Scalps, swings are the same. The only difference is like the time factor, man. Swings, I don't know. I don't wanna be cocky, but swings are like for pussies, man. Just for people who doesn't even have a clue about how the mechanics, what the mechanics of the market. You're just accepting that loss as it's a loss. Yeah, losses are part of the game. Yeah, losses are part of the game, but it's your job to understand why you lost. Don't just give me, yeah, my system works 70%, so I'm accepting that. Nah, you fucking pussy. No, it doesn't work like this. It doesn't just work like this. You gotta understand that you can be always winning. Yeah, you're gonna have losing trades, 100%. But why you lost that trade? Because I wasn't disciplined enough. I didn't wait. I sold demand. I bought a resistance. Yeah, bro. It's like just for people who really doesn't want to be involved in the market that much. So what do you call that, bro? That's not trading, man. That's speculating. It's either hits a TP or a stop loss. You have like TP1, TP2, TP3. Nah, that's not me. That's not just. I tried it. I tried it. I just tried it, bro. Why would I do that to myself? Why would I do that to myself? So that's basically the bus theory. That's basically the bus theory. Good. So what moves the bus is gasoline, right? Benzene, basically, or diesel, or electricity in Germany. That one moves the bus. So what moves the trend is prices, supply and demand. And these prices and supply and demand, once they meet, what do they generate? Orders, 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 orders. You know, orders. They generate orders. That's when the market gets the supply or gets the demand, basically the fuel to move. So what do you get out of this? Now you always buy a fucking demand. You always sell a fucking resistance. So if a supply generated all of this rejection, this supply, then and this supply too, then the market start pushing up. So you want to buy, you wait, you get a confirmation, or like this is the demand, it dropped another touch, so you buy, you be like, okay, this is my TP, right? And then it dropped before the TP, another demand, and up. So you cash out, or you cash out near, whatever, you buy again. That's what I'm trying to talk about. Good. So it comes to this supply, I start slowing down. I will be like, okay, this supply generated 300 pips. What I always expected to do is like generate 20% out of it. It's gonna generate more, but I always just look for like 20%. Then you'll be like, okay, it's slowing down, meeting supply, so you're gonna have a nice push to the downside. Nice push to the downside, nah. Doesn't mean that it's gonna come all the way down to the demand because I still got demands in here too, right? So you got shit in here too. That's why we use the higher time frames, which is like the 1 hour, 4 hours, for like our scalps, Anybody does that. While executing on the 1 minute time frame. I only believe in supply and demand. I only believe in the mechanics of the market. I don't believe in the structure that much, because it's gonna mess up your head unless you understand the mechanics of the market, which is orders flow, how orders flow, which is the bus theory, your trip from London to Berlin. What I just talked about now is what we back tested with no other techniques, with no other like sell stops, buy stops, with no like risk management techniques too, with no like trades management techniques, with no scalps too, with no scalp. These weren't scalps. They were like these trades were done on the 30 minutes time frame. They weren't even scalps. They were intraday trades. Some of them were like swing trades. Good. My favorite setup. My favorite setup. I have no favorite setup. I basically trade everything I see. But yeah, my favorite setup is like when I have a nice supply or a nice demand and the price is just about to approach it. And then I look on the hourly time frame. Okay, nice. I have like a nice validation candle. And I look at the 1 minute time frame, it's just building up. Like building up, what I mean, like building up. You can see like more volume getting in. These are like my nice setups. Like when I'm talking about the nice supplies, nice demand, it's like 4 hours, supply 4 hours demand. So instead of me scalping 20 pips, 30 pips, I'm gonna scalp 200 pips in a couple of minutes. You saw that last week. We did it. This one of like my really favorite setups because I over risk on it. I really over risk on it. Not over risk like in the terms of like I'm risking all of my money. No, it's just like over risk for me. Like normally I risk like 0.5, 1% on a trade to 2%, maximum 2%. But on such setups, I just drop 5%. Yeah, basically that's it. That's it. That's it for today. Quick 40 minutes. You don't need 6 hours. You don't need 70 hours. You need direct butter. You need direct shit. Yeah, why not? On such setups, yeah, I'm gonna do 5%. Why not? The 5% are gonna be from my profit. You gotta like watch the risk management video to know how I operate and how I manage my risk, my profits. I think in figures, good, and I think in terms of my profit, how much I made, how much I want to risk out of this, or how much I can I afford to risk out of this profit too. Because I don't want to like start eating from the capital. So especially like when you start trading the month, I minimize my risk. I build some profit, then I can start like for the next week start risking portions of that profit, and then I'm good. Can increase my risk a little bit, decrease it. Start like playing around your risk too. Start playing around your profit, your house money. Yeah, it's just a new level for all of us. Like a new level for me means like a new level for all of us. And I keep on saying that this is not school. This is not a trading school. You know, anybody does this. I'm trying as much as I can to show all of my steps. From A to Z. I don't care. I don't care if you pay me. I don't care if you cancel your subscription. I don't care. I didn't even filter the Discord group so far. I didn't even do that. Yeah, I'm gonna do it like in the next couple of days, but I don't have time to think about that. We got some serious shit to think about. No, Frank, you gotta watch the video, the record, from A to Z, like from the beginning, because yeah, just we talked about this now. But that wasn't the topic of the video, basically. Let me stop recording.